Hi, everybody, and welcome to a podcast with Liquity and Bluechip. My name is Michael. I'm the CEO of Liquity AG, and with me today is Benjamin Levitt from Bluechip. He's co-founder and CEO of Bluechip.org. Hi, Ben.
Hi, great to be here.
So first of all, let's give our listeners an idea what Bluechip does, for whom it is, and what the benefits are for users.
Yeah, so Bluechip is the world's first stablecoin rating agency, and we give letter grades from A plus to F to basically look at what happens in a bank run scenario and kind of evaluate the likelihood of a stablecoin surviving that. And these letter grades run from A plus, which is very safe, to F, which is kind of an automatic fail. And for users in general, the value is very straightforward. Because evaluating stablecoin risk is a very long process. So you need to track the collateral health, smart contract audits, peg history, the management teams, governance systems, and all of that. And so we have a public methodology, the SMITch framework, and with that we kind of do this analysis for everyone, users, institutions. And we also have a track record. So 75% of the stablecoins that we rate at F actually eventually depegged after our rating. So it also proves that our framework basically works and is robust.
Cool, thank you a lot. And what I try to do, let's quickly look at the website. Okay, I'm sharing my screen. So this is bluechip.org, I think, which you can visit. And what Ben said is here you have all the stable coins. And I think the important part is the grade, the rating, which goes from 8 to F, as Ben said. And I think this part is
Yeah.
public. I think you have more detailed reports that then are offered. And what you see here is kind of course, the market cap and the ratings. And what you see, I think, Ripple, GUD, Paxo, PSD. Actually, these are all Paxo setup centralized stablecoins that are in the A rating besides Circle. And we have LUSD and Bold. That's why I'm really proud. And I think we also have the call. So I think it's kind of dominated by Liquity and Paxo setup the A column. You wanted to
Yeah.
add something, Ben?
Yeah, I mean, I wanted to add also that yeah, we have not so far given out an A plus, but yeah, generally you're right. Like stablecoins that are are regulated for centralized stablecoins, um, there is currently sort of a setup that kind of aligns with, or some of these setups align with the SMITch framework in many regards. But obviously, there's always to all of the regulations that are out there. There's just more that we look at when it comes to the SMITch framework as well.
An interesting one, maybe, just kind of, I see Circle has an A minus, but USDC is B plus. That was a surprising one. Maybe you can add some caveat to it?
Yeah, so you're talking about Eurocoin compared to USDC, right?
Yeah, yeah,
Yeah,
exactly.
so here the main reason would be that USDC by the New York Circle entity is regulated under the NYDFS framework, which does not give us kind of 100% confidence in assets actually being bankruptcy remote. So
Mm.
the company assets being segregated from the reserves. And for Eurocoin in the EU under the MiCA regulation with their entity in France, there is much more confidence, and it's actually also a requirement. So that's why this
Oh,
great
okay.
difference comes in here.
But that's interesting, and it's a good example. That's something probably you as a user, it's very hard to figure out, and it's very easily summarized here in the rating. Cool. But as a next step, I mean, I'm really wondering, why Bold and LUSD, in your opinion, rated so well, A and A minus. Maybe you can add, um, yeah, a bit to that. What leads to a good rating in your framework, and what does it mean for the users in the example of Bold and LUSD. And by the way, those that don't know Liquity, LUSD is a stablecoin of Liquity version V1, and Bold is a stablecoin of the version 2.
Yeah. Regarding Bolt and LUSD specifically, LUSD of course is backed entirely by vanilla ETH in a non-custodial smart contract, and kind of the combination of over-collateralization with one of the safest crypto assets and enforcement of peg stability in an objective rule-based system creates one of the safest crypto-backed stablecoins that we have seen. And Bolt follows a similar model with the addition of liquid staked ETH, and it increases the capacity to scale. It also, of course, leads to inherited technical risk. But yeah, in general, these both of these crypto-backed stablecoins kind of eliminate a lot of concerns as well when it comes to kind of management, misalignments, and other issues that we might see with centralized stablecoins. So that's why these rank quite highly.
Okay, and you said it. I think we're looking now at the Bold rating. I think Bold got perfect score in management, decentralization, and governance. So can you maybe outline what could go wrong with other stablecoins? Why they rate, for example, in these categories worse? Just that users get an idea what they can look at and how these stablecoins differ.
Yeah, so I mean, fiat-backed and crypto-backed stablecoins generally serve very different use cases. So fiat-backed stablecoins are generally best for payments, remittances, treasury operations, and it's kind of for users that prioritize kind of using traditional rails and have peg stability in that regard. And crypto-backed stablecoins are better for users who prioritize censorship resistance or on-chain yield opportunities, and in general leveraged crypto exposure. And that's why retail kind of DeFi native users gravitate towards these crypto-backed options like LUSD and Bold. And it's difficult to say that one of the categories would be superior, but the choice really depends on the user's preference. So a Bluechip grade can be equally safe and equally achieved by a centralized and decentralized stablecoin.
Yeah, and I think that's very interesting, and that's what I like at your framework, that you look at the risk and kind of, okay, how much guarantees do I get as a user that the stablecoin doesn't depeg, or I can access the collateral, and we see you can achieve that in a traditional way, probably through a good legal and regulatory setup with fiat-backed stablecoins. I think Bold and LSD would be an example of how you can achieve that with a decentralized setup by eliminating a lot of these risks, not by regulation, but by code. But I assume, I mean, you talk a lot to a lot of users, I assume, and even institutional ones. What are the reactions to kind of to this fact, especially for TradFi people, that you say, hey, the stablecoin give you really good guarantees in a decentralized way, kind of crypto-backed, but also fiat-backed. Can you elaborate a bit, kind of what kind of discussions or questions that come up, just kind of a bit the chatter you have with clients about these ratings?
For sure, yeah, there are very different ones. I mean, and one that always comes up is the USDT rating. Tether is rated as a D, and the intuition for USDT would be that it's the largest stablecoin with the longest history, the deepest liquidity, so it must also be the safest. But historical peg stability is only one input, and it's just not the whole picture. And so we rated it as a D because of opaque reserves, undisclosed custodians, restricted redemptions, also weak bankruptcy protection. So there's a few concerns there. Of course, an audit that may come this year as announced could definitely change that. But so far we had kind of a decade of postponed audits as well. And in general, another question would also be, why does LUSD and Bold rank above USDC? USDC is also, of course, used by many. But the thing is, we really do not look at metrics like market cap, which is something that many newer users especially think would be very, very important. But I think the Terra Luna disaster, that's where kind of the Bluechip's idea also came to birth, shows very well why market cap is not a measurement for actual user safety and should not be a measurement of confidence in a stablecoin. It's really about the design and the redemption access to all holders, and that's also why Liquity and Bolt can differentiate themselves. So yeah, I think these would be like the main questions that most ask.
Yeah, and I think it's an important point, and I like that you gave the example of USDT. It doesn't mean that USDT is bad or something needs to happen, but it's just looking at the facts and saying what could possibly go wrong or what do we don't know, and then just seems other stable coins have much more things ensured or guaranteed that could go wrong. Doesn't mean also with Bold and Liquidity nothing can go wrong. There is technical risk, there is oracle risk, and you point that out, or collateral risk. But at least from all the factors that can be kind of excluded, we tried to do really a lot. To don't have access rights, to nobody giving you a direct claim, redemption claim, stuff other stablecoins don't have. And I think that's also reflected in that rating. And I think for that, it's great because it gives you a hint. It doesn't give you a guarantee, but it outlines, gives you transparency on that.
For sure. I mean, also, we at Bluechip are, of course, completely unbiased. We have a framework that can be objectively applied onto all stablecoins, and that's really also a necessity, in our opinion, of course, for every rating agency. But in general, our like in an ideal world, all stablecoins would be safe. But the thing is, we need some objective requirements and measurements on how we can actually, differentiate between all the stablecoins that are out there, and then we can obviously see a lot of differences. We just got to make sure that we also kind of push transparency and support actually being transparent about your reserves and all there's to it. And while we may have personal opinions about certain stablecoins that may be less safe or safer, as a rating agency, you really can only rate what you see and have to apply your objective ruling on that.
And I think what it also means for the users, that the rating means, okay, they're just, if the rating is worse, there are just more things to consider, or as I said, that could go wrong, or maybe also on the yield side. Actually, you probably should be compensated for this additional weaker setup or on non-factor. And I think that could be also a way how to look at it. Is there, maybe just talking about that, maybe it's also good to know for users what you don't look at, kind of what the rating doesn't include. Maybe the one or two biggest factor that sometimes users ask, and you say, yeah, but that's not reflected in the rating, or that's a separate angle you need to look at. Is there anything in particular you would highlight?
Yeah, I mean, I think particular when we look at technical risk, so far, Bluechip has not factored it in a grade in a way someone would expect. So we typically say that it's not assessed. We do like general red flag checks is what we call that, where we of course make sure that audits have been done and that also the recent smart contract audit is kind of actually relevant to the current code base. But further than that, we really do not want to give a safety grade, or did not want to give a safety grade for technical risk so far, because giving false confidence there and saying that there is no smart contract risk or a little smart contract risk is somewhat dangerous. And so we have now, after many years of kind of being here and also making sure that the framework actually works, we're close to announcing a bigger collaboration there with someone who's actually an expert in this area to also evaluate this technical risk. So this is something that also users ask, where we kind of have referred to not really being able to rate that in the way that we desire, and now we'll change that, but more to this in a few months. Let's say it that way.
Okay, so there will be an extension of your offering, kind of that
Exactly, yeah.
will be more on the technical side. Will be also continuous, or is this also more snapshot based?
It will be kind of based on a monitoring process. So
Okay.
we really want to make sure that this is up to date, especially in the crypto world where obviously things are changing regularly and also need to be up to date um, all the time. This is really important, especially for technical safety.
Good. As we are already looking into the future a bit, kind of Bluechip, I would be also interested to hear your personal opinion, because you're closely looking at the stablecoin space, how you think that will evolve. What will be the biggest changes we will see in the next 2 years compared to today?
Yeah, I think in general, a big topic is obviously regulation. So we at Bluechip think that regulation is sorting issues into, of course, jurisdictional buckets, kind of. So we have Mika, we have Genius, incoming models in Asia as well, and basically they will, in our view, inevitably push innovation toward crypto-backed stablecoins, actually, because um, that's also why, for example, LUSD and Bolt, um, they're obviously as being crypto native, you kind of sit outside of this regulatory perimeter. So I think this will be something very interesting to watch over the next years, to kind of the growth of crypto-backed stablecoins because of very sort of clear rules that are in place. There will be also more innovation in our view in that other regard. Um, I would also say that yield-bearing stablecoins will become kind of the default for treasury use. I think it's just a very attractive use and application kind of for yield-bearing stablecoins, and also Liquity in that case, um, yeah, might have an interesting future ahead. But just generally thinking, I just think this is an aspect that we'll see more of. Um, and lastly, I would just say, in general, the stablecoin universe will just keep growing in count. I just think there will be many more stablecoins launching, but I would say only like a meaningful share of supply will kind of concentrate a set of transparent, well organized, kind of and well collateralized stablecoins. So what I mean is that we'll have a bunch of stablecoins that will be kind of legit good options out there, while obviously also having a total bucket of many more stablecoins for very specific smaller use cases. That's my view, but this is really kind of the biggest questions that also many are actually asking, like how many stablecoins will actually be there and operate in like 5 years, and which ones will be the big ones that are liquid enough and that are actually being used by institutions on a big scale and by retail as well. So yeah, this is kind of our view, but this is a very interesting topic that I'm very uh, excited about personally, and kind of to learn how this will actually play out. And yeah, in total, the market cap of stablecoins, I think, yeah, is about to kind of 5 to 10x in the next 5 years. So I'm still expecting a lot of growth there. Obviously, the last year was great for stablecoins, kind of first year where you could argue we reached kind of mainstream in a way, but I really think it's just the beginning.
Okay, cool. And you just said that the aspect you're most kind of interested in or enthusiastic about. Can you elaborate a bit on that?
Yeah, I'm very
Which
interested.
aspect? Yeah.
Yeah, I'm very interested about or yeah, kind of thinking about how stablecoin usage will actually play out in the next years. Like how many stablecoins will actually be the ones that people are using, and will there be many stablecoins that interoperably kind of work together that we can exchange maybe even freely, right? And just use however we like, or will there be just specific ones that are actually there for the big use cases, and then many smaller ones that have just very certain applications? That's kind of where I see a lot of possibilities there, how this could play out.
And do you think in 2 years we still have the existing two, three big players, or will there be a major shift, and where will it come from?
I mean,
In the terms of players, kind of the
yeah,
big
I,
ones.
I think I think specifically for the next 2 or 3 years, I think euro stablecoins, euro denominated stablecoins will play a much bigger role with the introduction of Mika and all the issuers that are now regulated or getting regulations here, getting licenses. Um, I think this will play a much bigger role. I do also think we'll have the current players there for sure, to be honest. But I also truly think that certain applications, when it specifically comes to crypto-backed stablecoins, will make a bigger push and have a bigger impact. So I think we're still at a phase where kind of everything is growing in the stablecoin world. When we look at 5 or 6 years, I'm less confident about all stablecoins that we see today, of course. I think not all of the business models can work and will work. But generally, I think the diversification of stablecoins, also the larger ones, will grow.
Okay. And slowly coming to an end, but I want to tap into your huge knowledge of looking at stablecoins and talking to clients. And just a question that came up is, what would you say is probably the most overlooked fact in terms of risks for stablecoins or looking at stablecoins?
I mean, I would really say the most overlooked fact would probably be the governance systems of certain stablecoin setups. I think this is something where most users would not really kind of have enough information to actually know what's going on. We at Bluechip are talking to the issuers. We also know where to look, but generally, I would say that kind of learning about who is actually in charge, who can make decisions, and how how sometimes over centralized or also how kind of less or kind of poorly managed some stablecoins could be, right? I think this is something where people just don't really have enough overview, and this is also where Bluechip can really make a big difference for you when you have to consider which stablecoins you want to use.
Yeah, I think it's a good one. And to turn it even around, from a user's perspective, I'm sometimes really surprised how hard it is to figure out what claim you actually hold if you
Yeah,
hold a stable coin. It's not very transparent. And then even more surprising, even for the very big ones, kind of, okay, maybe you don't have a claim. Which is kind of okay. You have the DEX liquidity that's there, and if then you're on the mercy that you might get something, but you can't complain, you can't go anywhere, kind of just legally, which I found really surprising without naming any names. Either you don't have a claim or you don't have to go anywhere, which is surprising. And I mean, in
yeah,
the case of Liquity, okay, yeah, there isn't a legal counterparty, but at least, as long as Ethereum exists, you have kind of guarantees enshrined in code that will be executed, which I would call a claim. But that was really surprising when I
yeah.
really dived into the topic a bit more.
Yeah, sometimes large liquidity can kind of blur the fact that you actually don't really have a claim. If it's easy to use and easy to exchange, you sometimes don't really think about anything else. Yeah.
Cool. Ben, from your side, is there anything to add, or is that an aspect you sometimes cover in interviews that is interesting, or where you kind of see a lot of interest of users that you want to mention or highlight?
I think we covered these topics quite well. I truly think that these conversations are generally super important. People use stable coins on a daily basis in my environment. Obviously, it really depends in which area you work in and where you kind of generally spend your time in. But I think stablecoin risk is something that will be a part of our crypto life forever. I think it's obviously risk in general. We see a lot of hacks and a lot of things coming up in the crypto world and happening that are essential to kind of address, and they are most of the time very closely related to risk and safety. But generally, I think for stablecoins, as they can really be used as your daily savings tool, or your daily spending tool, or your savings tool in general, the question of risk is just really important. And so these conversations are super helpful, and that's what we also try to do with users and anyone who has questions, for sure. Yeah.
Cool, thank you a lot. So people that want to learn more can go to bluechip.org. You also have a Twitter account. People that want to know more about Liquity and don't know about us, you can go to liquity.org. We're also on Twitter. Hey, with that, thanks a lot. It was a great pleasure, Ben.
Perfect. Thanks so much.